Good afternoon, traders and investors. Will back here with another one, coming to you with a Tuesday market recap. Hope all of you had a very beautiful day of trading today. And in today's markets, guys, well, we started off the day extremely red because we had a mini black swan event. Developments in the war between Russia and Ukraine, more specifically the use of US weapons, more specifically ballistic missiles hitting Russian soil, and Vladimir Putin not being too happy about it, increasing the threats of possibly retaliation using tactical nuclear weapons, guys. This is the worst possible headline that you can possibly imagine the markets to face, and that is why we started off the markets excessively red before recovering amidst the rest of the day when the fear was kind of alleviated. But the morning started off in a very brutal fashion. Here's the heat map from my live stream this morning. As you can see, every single component almost in the market was red before we ended up recovering over the course of the day today. So in today's video, guys, we're going to take a look at a few key things together. Number one, review those headlines between Russia and Ukraine and derive whether or not it's going to be an ongoing problem. Number two, we have a few earnings prepared for you guys as well. We're going to be going over Walmart and Lowe's, two key indicators into the health of the consumer. So we'll take a look at those earnings in just a few short minutes together. Thereafter, of course, we're going to get into our technical analysis portion of the video, cover all our major sectors, see how they held up after today's price action, and then take a look at our big tech names and see how those are holding up as well. At the end, wrap it all up with a very quick glimpse into my portfolio for a few of the changing trades made today and what I have remaining over the course of the week. And of course, give you my possible trades for the juicy NVIDIA earnings tomorrow night. So a lot to cover in today's video, guys, but we'll try to keep it as short as possible. Let's jump right into it. So the SPY up 0.37% after coming out of a disaster this morning. QQQ up about 0.7%, but the market still was in a fairly mixed fashion throughout the day. Most of the outperformance came from semiconductors. NVIDIA, 5% jump in the day before earnings, looking quite good. The rest of big tech also looking decent. Walmart coming up 3% after their earnings, but that is pretty much where the bullishness stopped. The rest of the market was very mixed. Healthcare, once again, very mixed. Financials having its worst day in a while after leading the rally to the upside, now taking a well-deserved breather. And to the downside of the market, the bottom half, right? Very mixed price action today, guys. A lot of these sectors and names did not recover from the early morning sell-off, that is for sure. On the one-day relative, where do we stand? Well, everything was pretty much in the green, but not so much fantastic gains, except for a few key names such as NVIDIA, Netflix, and Walmart, right? Tesla putting in a decent gain as well, and big tech doing good. The downside performance today, financials and energy retracing a little bit. Where do we stand on the 1 week relative, guys? Still a very mixed market. I would not call it a broad and booming market just yet, to the same tune that we had right after the election for those 2-3 short days of euphoria and hope, right? So on the 1 week relative, still very mixed. Utilities, energy, real estate, basic materials, and consumer defensives are up. And look, most of the big components of the market down. Financials flat, consumer cyclical flat, technology and healthcare all to the downside. So we need to continue to see that participation, guys, by semiconductors and healthcare. It is absolutely crucial. Hopefully, NVIDIA can turn the tides around for the semiconductor industry, because that whole industry has done absolutely nothing, guys, since the month of July. Take a look at the 1 month relative performance for the semiconductors, and other than NVIDIA and Intel, and TXN because of their earnings, every single other company in this list has just been a big drag on the index as a whole. So we need to see some participation by them. Is NVIDIA earnings going to be the one to light the fire for semiconductors? We will have a look at that tomorrow after the close together when I wrap up their earnings for you guys. Now, before we get into the earnings, guys, let's cover this very unfortunate headline that we had early this morning, right? I saved it so they wouldn't edit the article on me. The Dow was down 400 points on the Ukraine-Russia tensions. So essentially, guys, the market pressure began after Russian President Vladimir Putin warned the US that the threshold for the use of nuclear weapons had lowered. A new stance after President Biden allowed Ukraine to use US weapons to strike inside Russia. Guys, I've been following this war for the last 2.5 years, and if President Putin was clear on one thing, is that you cannot attack Russian soil with foreign-made weapons. He was very clear on that. That is where he draws the big red line. He has pretty much said that an attack on Russian soil using foreign-made weapons is equivalent to the nation whose weapons are being used, that nation attacking Russia directly. So if Ukraine uses the UK's ballistic missiles to hit Russian soil, it's the equivalent to the UK attacking Russia directly. And the same same thing for the US. And the US administration has known about this, guys. It's been very, very clear red line for Vladimir Putin. And I do not know why, guys, especially due to the fact that the Biden administration is leaving the White House in the next 3 months. I do not know why they authorized the use of US ballistic missiles to strike Russian soil. That is the worst possible thing that you can imagine doing, guys, when you're trying to wind down a conflict, is to cross the last and only big red line that Putin has drawn over the course of the war. Now, obviously, there's a lot of complexities that go into the situation, but there was a very clear red line on that facet. So it's very unfortunate that President Biden authorized the use. I am still unclear why he felt the need to authorize the use, since President-elect Trump said that he would make big motions to end the war in a peaceful manner as quickly as possible. So the current Biden administration is definitely not helping the future Trump administration to solve these problems. President Biden now at this point has had 2.5 years to potentially bring this conflict to be resolved. And they say publicly that they do want to resolve the conflict. They say that Ukraine has the right to defend itself. Russia says it has its right to defend itself. But there was a willingness to come together and bring in peace talks. And this latest action by the Biden administration, guys, I have to condemn it, right? I don't like talking about politics, but regardless of whose camp you're for, whether you're a Democrat, whether you're a Republican, this is a very bad move for any administration, right? Any administration that would have done this, would have authorized this, I would have said that is really, really, really poor management on their side, especially during an election transition period between two administrations. So a bad look, and a bad look for the markets as well. I do believe, guys, that this one possibly will have some lasting consequences over the next week as we wait for Russia's retaliation to it. Now, when they say that the threshold of nuclear weapons has lowered, we're not expecting Russia to potentially launch the ICBM nukes, right? The intercontinental ballistic missile nukes, the ones that were dropped on Hiroshima. The last time that those were used were in Japan, unfortunately, during the 1940s. We're not expecting those. Those are the massive ones. But what they've been talking about now for about a year, and this is not Putin's first time about warning about this, if they were to cross that line, they're talking about possibly using the tactical nukes, which are reserved for the battlefield. They're not complete city destroyers, but they're absolutely devastating weapons, guys. They go against the Geneva Convention, of course. They're not supposed to be used, but you know, at a certain point, guys, like you got to stop pressing people's buttons, right? So we'll keep an eye on how these impacts the markets, but it has definitely left a bad taste in my mouth, adds an extra volatility factor. And I have, kind of scaled back on my trades a little bit, taking profit where necessary, because I would not be surprised if we do get more of these headlines over the next few days. It's going to be tough for the market to kind of act as if nothing happened, similar to the fashion that it acted this afternoon. I was actually quite surprised that the market was able to muster the rally back over the course of the afternoon, but we will keep a close eye on the developments of this situation. Now, moving on to some earnings, shall we? So moving on to Walmart earnings first. Walmart, guys, absolutely crushed it. And Walmart is a key player to give us a sense into the health of the consumer. Obviously, we know that there's a bear thesis at hand right now in terms of a possible recession coming in the next 3 to 6 months. Now, if you don't believe the economic data that comes out of various bureaus, like the GDP numbers, the inflation numbers, the jobs numbers, right? If you don't believe those, well, we have to at least believe what companies say in their earnings, because their earnings are audited by third parties who have no skin in the game. So it's not as if Walmart can lie about their revenues and their same-store sales. I'll give you a quick recap of what we've seen from the consumers so far over this earnings cycle. The banks have told us that not only are the banks themselves very well capitalized for any drawdown or any credit crisis, but that consumers, and depending on their spending patterns in their checking accounts, savings accounts, and otherwise, the savings are slightly going up, their investments are slightly going up, and consumer spending has remained relatively good. That is from the bank earnings. We also got credit card earnings. Visa, MasterCard, American Express covered all three for you guys, and all three of those payment processors have said the consumer is resilient and they do not see any major red flags, both in terms of spending patterns, but also in terms of delinquency patterns. When we're looking for recessions, we're looking at people defaulting on their loans or defaulting on their credit cards in a higher rate than they have been in the past. And that has just not been the case, guys. Then we can drill down to other company earnings, such as McDonald's and other food processing companies. They have said, for the most part, that the consumer is somewhat resilient. These companies have had to resort to promotions and extra marketing to keep the demand up, but it's not as if the demand is falling off a cliff and that same-store sales everywhere are going negative, except for Starbucks, but Starbucks is a little bit of a complex topic, right? So all across the board, we've been hearing from these various companies in different segments of the market, and they've been telling us that consumers are, for the most part, more resilient than not. Now we get the behemoth that is Walmart that generates over $650 billion in revenue every single year. So if you have to listen to someone in terms of the health of the consumer, you have to listen to Walmart, because what do people do when times are rough? They go down, right? They're used to shopping here. They will pivot to the Walmart, which is like the lowest end of the spectrum for a lot of people, right? It is where you shop for the lowest prices. We got earnings from Costco. Costco said that its members were fairly resilient, but you can make an argument that Costco caters to the, higher middle class to upper class consumer, right? Well, Walmart caters to absolutely everybody. So when they say that the consumer is resilient, you have to listen, guys. We have to take this data for what it is, right? And I look at things in an objective manner. I'm just not seeing the EPS crushes, the profit crushes, the layoffs that are pinpoint, and the guidance of these companies that are in tune with guiding for a recession the next 3 to 6 months. I just do not see it. So the bear thesis is still there in the back of my mind, but as we get more and more bullish points of data, guys, it gets kind of hard to get behind that recessionary thesis when we're just not seeing it in the data just yet. You can argue that the data is late, the data is behind, sure. But in my opinion, if we do start to see signs of a recession, we won't really be seeing them before at least February or March of next year. So as of right now, guys, still smooth sailing. Looking at the numbers, guys, they crushed it. EPS beat by 8.87%, not a problem there. And they even crushed the revenue estimate, guys. When we look at the headlines, you guys will see no problems at all for Walmart. And let's start it off. Walmart hikes its outlook. Not only did they double beat on the current quarter, they raised guidance. Triple beat for Walmart. Raised its outlook again as shoppers spend more outside the grocery aisles. One of the things that Walmart, Target, and other people have been telling us about is the consumer's hesitation to spend on anything other than essential items. Well, now the consumer appears to be broadening out its spending patterns, and this is not for Q4 for the holiday season. This quarter for them ended in September, right? So it's pretty much the summer months into September. So here we go. Let's move into it, right? They raised their forecast on Tuesday as its customers bought more discretionary merchandise, ordered more deliveries to their homes, which costs an extra fee, by the way, and started their holiday shopping. The discounter now expects net sales will grow between 4.8 and 5.1 for the full year. The previous forecast was 3.75 to 4.75. They literally increased the bottom end of their guidance, guys, by a full 1%. And that is big for Walmart to do. Sales of general merchandise outside of the grocery department grew year over year for the second quarter in a row after declines for 11 straight quarters. So it appears as though the consumer is not doing this, declining and then falling off a cliff. It appears as though the consumer was declining, and now we're starting to see him come back and curve to the upside. Curious how that works. Still, he said consumers are waiting to make those purchases until they see a compelling deal, especially as they pay more for food. This is no stranger. We've known this for about a year in times now, that the consumer is very picky. Let's continue. We're expecting this holiday period to be very consistent with that, said the CEO. They're focused on price and value. Very logical. Comparable sales, an industry metric also known as same-store sales, jumped 5.3% for Walmart and 7% at Sam's Club. Now, take a look at this trend, guys. Here's your same-store sales. Notice the decline when the consumer started to be a little bit more picky, and because of inflation and higher interest rates, started spending less on discretionary items. Down, 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 inflection point, and then whoops, 2 straight quarters now of increasing same-store sales. So I wouldn't say that this is enough to derive a longer-term trend, but it's definitely moving in the right direction, right? Let's continue. Walmart US transaction rose 3.1%, and the average ticket increased by 2.1%. So not only did customers visit the stores and website more, but when they did, they also spent more. That's what these two figures mean. E-commerce sales rose 22% in the US, with gains coming from curbside pickup and home delivery, along with growth in Walmart's advertising and third-party marketplace businesses. Walmart shoppers have also been willing to pay more to get their purchases faster, something you did not see 6 months ago. And even UPS and FedEx guided on this in their earnings. People were hesitating to pay for the premium shipping option because budgets were tight, right? Now it's coming back. 30% of customer orders in the US have come with an extra fee to get delivery. Here's your e-commerce sales. Very, very stable over the last 4 quarters for Walmart. Let's continue. Rainey said tariffs could force Walmart to increase prices, talking about the Donald Trump potential tariffs, but said it's too soon to say what merchandise may get more expensive. We never want to raise prices, he said, the CFO. Our model is everyday low prices, but there will probably be cases where prices will go up for consumers. He said about 2/3 of the items that Walmart sells are made, grown, or assembled in the US, which reduces the tariff risk for those goods. So 2/3, guys, fairly large number. So I wouldn't expect massive price hikes at Walmart, but here's what they had to say about this, which a lot of people don't obviously understand either. Donald Trump is not bringing in new tariffs. These tariffs were maintained by the Biden administration. And here, you can take it from Walmart. Don't take it from me. We've been living under a tariff environment for 7 years. That encompasses Biden, and that encompasses all of Trump's last election cycle, too, when he was president from 2016 to 2020. So we're pretty familiar with that. Tariffs, though, are inflationary for customers. So we want to work with suppliers and with our own private brand assortment to try to bring prices down. So they're used to it. As they said, they've been doing it for 7 years. The Biden administration did not cancel all of Trump's tariffs, not even close. Now, the National Retail Federation, a retail trade group, said it expects holiday spending in November-December to increase 2.5 to 3.5% compared with 2023. So apparently people are in better shape at the end of this year than they were at the end of last year. So a good sign once again. The consumer apparently, if you take all of these companies' word for it, forget the GDP, forget the jobs numbers if you guys don't trust them, right? Forget the inflation numbers if you guys don't trust those either. Take it from the companies directly, guys. It serves them no purpose to fluff up the guidance and fluff up the numbers because they have skin in the game, right? All these bureaus that publish data on the economy, they have no skin in the game. These companies and these executives, a lot of them get paid for their performance. It is not in their best interest, guys, to fake numbers and then have their stock price fall by 40 to 50% when they get accused of accounting manipulation like SMCI, because then the executives lose all their multi-million-dollar bonuses. It's not in their best interest, guys. Trust me. When there's money involved, people tend to tell the truth, right? Especially when it's in their best interest to tell the truth, right? So he said items like TVs, Apple AirPods, Beats headphones, and even tires have been selling. Some of the general merchandise gains indicate that consumers are feeling relief from inflation, but some have also have to do with Walmart's strategy, he said. The company has deepened its assortment of toys, home goods, and more through its third-party marketplace. So Walmart trying to find the middle point between catering to all income levels of the consumer. So they've just added different product tiers for everything that they sell. Fantastic earnings, fantastic guidance. Take a look at these total revenues. We'll go through the slides very, very, very briefly, but I just want to show you what a strong company Walmart is. Total revenues, no drop off, very consistent, guys. And I mean, we'll go through the fundamentals in a bit, guys, but I mean, you'd be hard pressed to ever be able to find something bad in this EPS expansion curve and in this revenue expansion curve as well. Such a very solid company is Walmart. Gross profit rate still roughly the same, but down, but still within the historical norms of the last 5 quarters. Operating expenses slightly up. They justify it right here. Hurricane-related recovery or expenses. Increased marketing, obviously marketing and promotions, because they know that consumers have less disposable income, so they want to get them in the store to present them their deals. A lot of other people are doing this too. McDonald's is doing this. Starbucks is doing this. Domino's Pizza is doing this. Other retailers are doing this as well. Operating income down a little bit, but they just justified why, right? More operating expenses leads to more operating income. We just justified that. Nothing bad there. EPS is very standard and consistent. Free cash flow as well, looking very good, guys. Nothing bad to see here. Operating cash flow is very solid. Free cash flow, another very solid quarter of free cash flow for Walmart. Nothing to see there. Still doing buybacks, still paying dividends. Remaining share purchase authorization, $13.5 billion. That's about 0.4% of their float. So it's not the biggest amount, but it still is something. Just goes to show they're utilizing this free cash flow to pay out shareholders in dividend and share buybacks. Return on assets, super high. ROI for every dollar you invest in them, extremely high returns right there as well. The US comp sales, guys, there's your trend, right? There's your trend and increasing right now. Same store sales going up, looking very good. And you might say, yeah, but this is just in the US. No, it's actually really not. International sales as well, 12.4% to the upside, guys. Absolutely crushing it. Absolutely crushing it. Mexico, China, all places. You don't believe me? Take a look. Mexico, decent numbers. Not as high as the most recent few quarters, but still very good in terms of comparable sales growth. I would say that these were anomalies, and now we're back to a normal run rate. Nothing wrong with those numbers right there. Canada as well. Usually Canada has always oscillated between 3 and 5%. Every time I cover Walmart, every time I've looked in their earnings for the past, at this point, 6, 7, 8 years, they've always been between 3 and 4% for same store sales. No problem there. China, boom, 17% right there, 15% in the most recent quarter. Fantastic growth. I mean, even Sam's Club, right? Their version of, you can call it Costco or something like that, right? Net sales without fuel, 7.2, net sales 3.9. Very, very healthy. And the list just goes on, guys. I mean, there's nothing to see here. The company's just doing what the company does best. Now, the one problem that I do say with Walmart right now is the valuation. The company is a little bit expensive, you know what I mean? So taking a look at the valuation, so beautiful earnings from Walmart. I can't really criticize them for anything. They're rounding the corner. They increased their guidance. They have a lot of data on the consumer, guys. I mean, take it from all these companies. Like, you're talking about companies with combined revenues. We got Amazon earnings too. You're talking about, if we would look at the aggregate amount of revenue that these companies pull from the market that we've analyzed on the channel, whether it's the banks, the credit cards, the wholesalers, the food companies, all of them combined, guys, I'm pretty sure we would at least have, just Walmart alone is 680 billion, right? Plus Amazon, that's another 500 billion. We're talking probably like $2-3 trillion in customer data, customer facing data. So you kind of have to listen, right? So moving into Walmart, the valuation is where I kind of draw the line, right? Revenue growth of 4.5 per year, EPS growth of 11% per year, decent and standard numbers for Walmart, nothing fantastic. At 86 bucks right here, the PE ratio 34.4. That is high for Walmart. I really wouldn't want to pay anything above maybe a 25, 26, 27 for this company. The PEG ratio, when you divide this PE by their EPS growth rate, it gives a 3.12. But as I said, when companies are not known for their growth, when they're not growing the top line on the EPS that much, usually the PEG ratio is not the best metric to use. You want to use a more value-oriented metric like the free cash flow yield or price to sales. So free cash flow yield at 3.8%. It's okay. We look between 2.5% to 5%. This is literally right in the middle. The higher, the better, right? I'm not expecting Walmart's free cash flow to drop significantly, right? Or I'm not expecting it to also increase significantly. So this free cash flow yield will largely oscillate with the share price. If you get a big decline, this free cash flow yield will go up. It just means you're getting a better bang for your buck if you want to buy the shares down there. And their other metric, the more value-oriented metric, could be something like a price to sales, right? Here's the price to sales ratio history for the company. And you can see that usually it trades under a 1 price to sales, like 0.6, 0.7-ish. Now we've kind of blown off the top, guys, trading above 1 price to sales. That is not the historical norms. So by all standards and by all measures, Walmart is an expensive company right now. And even on the technicals, guys, I mean, we've been overbought conditions now for the past 6 months. The monthly as well. For the past 6 months, overbought conditions, 85 on the RSI on the monthly. We know Walmart can last in these locations for a while, but the last time they did this was in the early 2000s, right? On the weekly as well, very overbought conditions. On the daily, not yet overbought, but you guys get the idea, right? The company is very expensive. The technicals are overbought. So for me, it's not a buy. If I had this company in my long-term portfolio, I'm not selling Walmart, guys. They're not going anywhere. I might as well hold it for the next 5, 10, 15 years. You may as well hold it unless you find something of equivalent nature at a better price, like in terms of the quality of the company. That's the only reason I would swap Walmart for something else, is if you can find such a powerful, defensive, consistent, profitable company like Walmart at a better attractive valuation, you can swap. But as of right now, this is just a hold for me, not looking for any swing trades to the upside or to the downside. And I'm also not looking for any additions to any long-term shares at all. If I wanted to buy this one, I'd have to get at least a retest of the 12 EMA down here. Walmart can pull away from the 12 EMA for like 6-7 months, but eventually they do snap back. So eventually when they do have a little bit of a snapback action right here, it'll just be normal price action. Nothing's going to happen to the company, just normal price action, sector rotation, call it what you will. If we get a snapback back down here, maybe in the 76 to 70 range, might be interesting for me. But until that time, it's a bit of a pass for me, but phenomenal company. It's just the valuation that's holding me away, right? So that's pretty much everything for Walmart. Now let's dive into Lowe's, company number 2. Before we do that, give me a very brief moment. All right, talk so fast and I talk so much, sometimes you need the coffee, right? So moving into Lowe's, another consumer-facing company. I'll remind you what the context of Lowe's and Home Depot was last quarter when we last analyzed these two stocks together. What they were saying is essentially that the consumers, because of the high interest rates, right? Keep in mind, a lot of consumers go here, and for a renovation budget, talking about a kitchen or bathroom, sometimes you're looking, well, for a bathroom, you're looking at between 7 to 12 grand, depending how big or how fancy you want it to be. Sometimes it's more. And for a kitchen, you're looking anywhere between 25 to all the way up to 50, 60, 70 grand, depending how fancy you want to make it, right? And a lot of that stuff is financed. And unfortunately, you just can't get really good financing rates right now, 7, 8, 9%. I mean, you were getting like 2% during the pandemic. So there's a lot of pull forward demand for renovations during the pandemic, but now not so much. Consumers are just kind of keeping the renovations kind of at bay until they feel that the interest rates have come down enough to where it's worth it for them to do the renovations. So is that still a concern for Lowe's? Let's have a look. Moving into Lowe's. Lowe's beats on earnings and hikes guidance, but still expects sales to fall this year. Let's dive into it. In terms of the numbers, guys, they did have some decent numbers for this quarter. So they'd have a double beat on this quarter. 2.4 and a 1.16% beat on revenue, and they increased guidance, guys. But the problem is even with the increased guidance, it's not as good as it was about 2 years ago. So the comparisons are quite rough for them right now. Even with the better than expected results, the home improvement retailer is projecting a year-over-year sales decline. We knew this. They've been talking about this for 6 months. They now expect total sales of between 83 and 83.5 billion, higher than the forecast of 82 to 83.2. So they raised the guidance by literally, what is this, like 0.5%, not even? It said it expects comparable sales to decline 3 to 3.5%, slightly better than the 3.5 to 4% drop previously anticipated. That's why I said they raised guidance, but the guidance is still not that good, right? It also cut its full year forecast in August as it predicted weak home improvement demand in the back half of the year because of high interest rates. Here's what the CEO had to say. The retailer is still feeling pressure in the home improvement market, particularly on DIY projects like redoing the kitchen or the bathroom. Now, moving on further, we are going to get a new normal when it comes to mortgage rates, he said. And I think that we obviously have not gotten there yet. Talking about those sticky yields, the rates staying higher for longer type of thing, right? Now, comparable sales declined 1.1% year over year due to weaker demand for bigger and pricier discretionary DIY projects. That was offset in part by demand driven by preparation for and repairs from the hurricanes Helene and Milton, along with growth in sales to home pros like contractors. Lowe's competitor, Home Depot, reported last week that customers are still deferring bigger projects and pricier purchases even after 2 interest rate cuts by the Fed. Ellison said, Lowe's has noticed those deferrals too, but he added that historically, the data tells us that these projects are not canceled, they are just postponed. They've been saying this now for the past 2 quarters, so it should come as no surprise. We've not seen any real material sustained movement due to the decline in interest rates, but again, we know that it will come on the horizon. It is just a matter of time. So there you have it, guys, with Lowe's, right? So Lowe's and Home Depot had earnings last week saying the exact same things. Unfortunately, because of the rise in 10 and 20-year yields after the rate cuts, a lot of these home renovation projects, because I've priced them out myself, a lot of them are based on 5-7-year payment plans. It's very rare. I mean, if you're taking a 1 to 2 year payment plan, then those rates have largely come down a decent amount. But if you're on a longer term payment plan, you haven't really been seeing the benefits of lowered rates. So consumers are still kind of largely, as the CEO said, they are not canceling the renovation projects. They're just postponing them. So that's why the demand for Lowe's is a little bit weak right now and why the stock was down about 4.6% today. So in terms of their earnings, guys, I mean, everything stays pretty much the same. Only 20, and this is a point why I prefer investing in Home Depot rather than Lowe's, because their customer segment is not so reliant on the DIY customer. They have a lot of contractors. And who do contractors work for? A lot of them, yes, they work for consumers, but a lot of contractors work for commercial buildings, industrial buildings, and new home construction projects as well. So those contractors bring in a lot of business that is not so cyclical. They have jobs all year round. And because of that, only 25% of customers are pros, or contractors at Lowe's, but Home Depot, 50% of their consumer segment is contractors, which is why, in my opinion, Home Depot is a more resilient business when we go through this cyclical period, right? Now, same consumer slowdown as Home Depot, no surprise there, but the long-term secular trends are bullish. As they said, they do expect consumers to come back to these renovation projects, but maybe not for maybe another quarter or two. That being said, revenue growth and EPS growth, 3% per year revenue and 5.8% per year. That's not so different. It might seem really low, guys, but it's not so different than Home Depot. Here's the number for Home Depot, right? These companies have been around for a very long time. They're not growing as much as they used to. They just want to consolidate and protect their current market share. So let's get into the valuation here. At $260, the current price right now, you're looking at a price to earnings of 21.8. Not the worst, not cheap though, however, but still not the worst. The PEG ratio, I mean, stands to argue, right? I've said it before, when you have under 10% per year EPS growth, the PEG ratio is just not the best metric at all, right? You got to use the best financial valuation metrics depending on the style of the company and where it is in the evolution curve of the company, right? So for these things, we would tend to use the free cash flow yield because this company does do a decent amount of buybacks, and the free cash flow yield right now is at a 5.1%. That is above my target that I look for at about 2.5 to 5%. So Lowe's is pretty good, guys, and I would not be opposed for a little bit of a swing trade. If we come back down here and maybe retest these prior lows, no pun intended, down here at about the 245 to 240, I could be tempted to maybe play some short puts around there. But in terms of if I had to invest in one of these companies for a long-term basis as part of a longer duration portfolio, I probably would pick Home Depot because I described the customer mix is better and more defensive in my opinion. They get a lot more business from contractors and professionals, and for all intents and purposes, I mean, the valuations of them, look, free cash flow yield at 350 was almost the same. The pegs, you're not supposed to use the pegs, but the PE ratios are honestly the same in these two companies, and the free cash flow yields are also the same for these two companies. So not too bad of a deal. I would be willing to play it down there, but like I said, for a longer term portfolio, I have a personal penchant for Home Depot, but none of this is financial advice anyways. So that being said, that is all we had it for our earnings today. Now let's jump into the indexes, and we will see, guys, that not much has changed, right? The SPY bulls still in very much control of this daily uptrend motion right now. We have some nice little bounces occurring at prior resistance, which is current support, at the moving averages too. Now, whether or not we see, I told you guys, watch for the hourly trend changes, right? Now, let me just put this in regular trading hours. So as you can see, we almost lost the hourly trend change, but the bulls got it back today. So if we can continue on this hourly trend, I think we have a good chance of filling the gap up here at about 592.92 on the SPY. And then it's anybody's guess whether or not we were to put in the lower high into lower low. At that point in time, you'd be looking once again for the weekly higher low for possible further trend continuation, because the bulls control this entire weekly uptrend as of right now. And in terms of the daily, guys, well, if NVIDIA has really good earnings tomorrow, very possible that if we end the day green and fill the gap, very possible if NVIDIA earnings are bullish, that Thursday we do get the trend continuation, and that would line up with who's in control right now. Your daily bulls are in control, the weekly bulls are in control, and the monthly bulls are in control as well. So until we lose at least the daily time frame, I cannot give any points to the bears right now. I'm not saying that the bear thesis does not exist, but as we saw in terms of company earnings, the recessionary data is not here just yet. Can you pinpoint certain cracks here and there? Yes, but obviously, guys, that's a byproduct of interest rates being at 20-year record highs for the past 2 years. Eventually, it is going to have an impact on the consumer. We want to know if the impact is too big to handle and whether or not it's going off a cliff and whether or not unemployment is skyrocketing, which is not the case right now, right? Unemployment usually skyrockets when there's less demand for products for companies, company profits dwindle, companies have to cut costs, they go onto a layoff cycle, and then the cycle perpetuates. We're not seeing that right now, especially from some of these major companies, right? Moving on to the QQQs right now, same analysis stands, right? So the Q's looking pretty good for some daily trend continuation. We'll be looking to fill the gap at this point, 507.85 over the course of tomorrow's trading if we can maintain this nice hourly uptrend that the bulls so casually got back today. So we're looking for the maintenance of that uptrend. In the event, however, we roll over and flush these lows, 494, you'll be looking at your first daily downtrend in a while, and you'll just be looking at more weekly consolidation. And the weekly higher lows are close, guys, 485.37. Need to pay special attention at how we react to that zone in the event we come back down and touch it. But for now, the bulls remain in full control. So I do still have a bullish leaning bias in all of my trades right now. Into financials. So financials down about 0.66%. Green candle on a red day for them. Not losing any major levels, however. You can argue that we did flush below this zone right here. So in this case in point, right, daily uptrend, consolidation sideways. I'm not going to give it to the bears just yet. You can argue that it's a little bit of a daily downtrend right now. And even if we flush into tomorrow, guys, is it that big of a deal? It would be a daily downtrend, yes. But what are we looking for here? Who's in control of this chart, right? Look, who's in control should be very, very obvious who's in control of this chart. Weekly bulls in full control. So even if you do get the daily downtrend rollover and the index rollover, still on financials, a lot of space. Anything above 46.19, looking for the daily or weekly higher low for further trend continuation. And I bring it up every day, but my favorite play right here on financials is Berkshire. I think they're poised for a nice year-end rally. Moving on to healthcare right now. Healthcare can't get the job done, guys. Once again, healthcare too. Red day in terms of percentage, but a green candle. Still daily oversold conditions and still, well, not really weekly oversold conditions, but the weekly still in a weekly downtrend. So the bulls have not yet found a bottom. For the bottom, guys, I'll remind you what you need. You need to get the hourly trend change. There is no hourly uptrend since this entire leg down, and you can barely find one here before they put in a nice little rally there. But until you find a new hourly uptrend, this daily move down is not finished. So if you break the highs of today, tomorrow, that will be your first confirmed hourly uptrend. We'll get back above the 12 EMA on the 1 hour. Then you get your daily bounce. And then once again, you measure the size of the bounce with the fibs. And if we can put together a daily bounce at least as high as 50%, the bulls have a good chance at getting the daily uptrend back. That is step number one. Then step number two, they need to get the weekly uptrend back. And only then will you know that the monthly bottoms are set and we may be going for another leg of rally into 2025. But it's going to take some time, especially when you have the RFK headlines working against you, right, in terms of the healthcare sector. So not my favorite sector to play right now, but there is one that I am watching very closely in the event we continue these declines. As a matter of fact, it's kind of ready right now. It's just AbbVie down here for some short puts, high 150s to mid 150s. Would not be opposed to playing that company right there. And even a company like UNH, which has come down significantly from the highs, if for whatever which reason we find ourselves back down here, 550 towards the 200 EMA, I am going to probably be taking that trade, guys, looking for the breakout, retest the lows, and possibly run onto a new leg of monthly uptrend. Moving into semiconductors now. So semiconductors having a good day today, 1.09%, but obviously tomorrow we have NVIDIA earnings, and NVIDIA earnings will move this sector an absolute ton. As part of the SMH, NVIDIA represents about 20%, 15 to 20% at any given point. So obviously that's going to move the index a ton. Now, what we know for semiconductors right now is that it's a tale of being trapped between two levels. We are trapped between overhead resistance on the weekly here, 260 down to 250, and below us, 235 down to 225. So we're going to need to break one or either direction, right? As of right now, there's no clear trend. You can argue that the bears have a little bit of short-term control, but all in all, I do feel that this is somewhat of a tightening range in the confines of two big ranges, one of support, one of resistance. So we will see how this one breaks tomorrow. One thing's for sure, if we get the daily, if tomorrow is bullish and then NVIDIA flushes, you'll get the daily downtrend flush, and then we will be looking, can the bulls save 225 and the 50 EMA on the weekly? The 50 EMA, guys, has not been lost on the weekly time frame since they started this whole AI rally early 2023, talking about February. So need to play defense right here. This is the Black Monday flush, of course. I'm not including it because it was a little bit of a black swan event. So we'll see what happens if they can defend that. And to the upside, of course, if we get a nice bullish rally, well, of course, we need to crack above 261 to the upside, and that will pretty much give you a new breath of fresh air in terms of a recapture of the weekly uptrend. Moving on to the IWM Russell. So Russell, not looking too bad, trying to find a base of support. We have not filled the gap just yet. 224 is the election gap, right around the 50 EMA, which has been a decent EMA for this chart ever since the month of September. So not yet filling the gap, but the Russell had a very nice rally from the bottom to top. It doesn't look like much, 0.74, but if you measure from bottom to top, this is actually a 1.7% move. So looking quite good. And in the process, they are trying to reclaim the 1 hour time frame. So we'll see if they can get that 1 hour time frame change under their belts tomorrow. That could signal that the daily consolidation is finished and we are now on to a daily leg higher. The only problem with the Russell right now is the size of the pullback, guys. The size of the pullback went beyond the 618. What does this let us know? Is that it's going to be tough for the bulls to do the exact V-shaped recovery style and continue this uptrend in one clean shot. If anything, at best, they will probably have to do somewhat of a tightening range, accumulate above this support zone, and then maybe we can get another leg higher, right? But when you pull back 618 retracement, that's a pretty deep cut, and it's highly unlikely that the bulls can V-shape. Can they V-shape? Sure, there's always a probability, but in my opinion, this is a bit more likely. And in the event, guys, we lose the hourly timeframes into Thursday with NVIDIA earnings, and we flush something like this, a daily downtrend, right? That would be daily downtrend. And once again, we will be looking for further weekly consolidation. This is a nice weekly uptrend right now, looking for the weekly higher low, anything above 217, looking for that weekly higher low. And we're kind of trying to use a combo of the 12 EMA to the downside and this whole prior resistance range, which is now support of 2020 and 2021. So not looking too bad there. Moving into the Dow Jones. So the Dow Jones down about 0.28%. Not looking too bad. Still looking for the breakout, retest, and possibly run. And now we are coming directly into that zone. 43 down to about 42.5 is the mark for the Dow Jones. I'll remind you who is in control of the weekly here. The most important time frame, in my opinion. Looking for the weekly higher low of this gorgeous weekly uptrend. That's why we have confluence down here. It's the daily support box, but it's also a key pivotal moment on the weekly. This is the weekly 12 EMA, and you can see the Dow Jones has usually always done a good job of holding up close to or slightly under the 12 EMA, so I wouldn't count the bulls out just yet. They do still have control of all the major time frames. The daily's not lost yet, the weekly, and especially the monthly is not lost either, so looking quite good on those fronts. Now, moving into further things, moving into Bitcoin, Bitcoin put in a new all-time high, and that's all I'm going to say for the chart, right? We were looking at this kind of like a daily bull flag, right? It is a flag range of accumulation. That's why we call it a flag, right? It looks like a flag. So usually when you get a break to the upside, especially when you can close a 4-hour time frame candle above the moving averages there, it is looking pretty good for some continuation. Now, the bears have an attempt at smashing this one back down, but look at this control of the 12 and 26 by the 4-hour bulls. A masterclass in a daily bull flag holding the highs, which lets you know we do not want to give back too much, because then if we give back too much, it takes a lot of money to get us all the way back up here. So we want to protect this level, stay close so we can go for the bull flag and attempt the 100K rally. And it looks pretty good in terms of doing that. So pay special attention to the 4-hour time frame. This time frame should be your guide. If you see a significant loss of the 4-hour time frame and a significant loss of the 26 EMA, which we have not lost, guys, since we started after the election right here, that is going to be synonymous with most likely the start of larger form daily consolidation. And we will tackle that when we come to it. But as of right now, Bitcoin bulls remain strong. Moving into big tech right now. So Apple up about 0.11%. I mean, there's not much to say on this Apple chart, right? Apple has been largely consolidating between this range. It looks like semiconductors, right? There's nothing to say here. Apple's been moving sideways. You can argue that there's somewhat of a daily uptrend right here, but it's not pretty. We're still battling with this overhead resistance, 230 down to about 225. We're stuck in that range. And you look on the weekly, it's really the same, right? We're just stuck in this range of accumulation. So as of right now, no trades for me on Apple. If you dip a little bit lower though on Apple, 219 to 215 could be an interesting area to write some short puts. In the event Apple goes down, but the rest of the market is fine, then I would play Apple. But if the rest of the market is down and Apple is down as well, I'm probably not going to play Apple. I'll play companies that I have better conviction in terms of the fundamentals of the business and the growth ahead of them, like Amazon and Google. I think Amazon and Google are going to grow a lot more dollar for dollar than Apple will grow in 2025. That's just me. A lot of this price action right here is the tremendous amount of buybacks that Apple has been doing. The valuation is quite high. So as of right now, I'm not adding any long-term Apple shares. I'm not selling any either. I'm just holding. And for swing trades, I really want to get the juiciest levels, because if we're looking for a breakout trade on Apple, guys, I don't think that's the best one for the breakout trade. My favorites for the breakout trades are either Google or Amazon to the upside, much more favored than Apple, but that's just me once again. I have nothing against this company. It's just the valuation and the concerns that Apple's facing right now doesn't really lead me to believe that they have something under their sleeve that could propulse them to an extra 20-30% rally. I think if they do get that over the course of the next 6 to 12 months, it'll be a case of the rest of the market just going up and Apple going up with them, rather than Apple releasing something so groundbreaking that it starts a brand new revenue uptick cycle for them, right? So hopefully that makes sense for Apple. Moving into AMD right now. Oops, moving into AMD right now. So AMD up about 0.33%, not looking too bad on the day, but this one will be heavily impacted by NVIDIA earnings as well. So if we take a look here, guys, in terms of the daily, well, we know that obviously we are in a context of a daily downtrend. We know that the bulls now have a bounce underway, but arguably none of this matters. NVIDIA has an expected move tomorrow of about 7.5%, and I would expect in AMD, especially to the downside, right? We know that AMD is good at one thing. When other stocks and semiconductors rally 5, 6, 7%, AMD gets half of that. They rally sometimes 2, 3%. So if NVIDIA beats, AMD may only rally 2, 3%, right? But if NVIDIA misses, or they're not really going to miss, it's just that Wall Street might send the stock down, right? So if NVIDIA comes down 7, 8, 9%, I expect AMD to come down 6, 7, 8, 9%, unfortunately for the company. So as of right now, extremely tough to derive some short-term price action. The one thing that I can say, guys, is that we are at a tail of a turning point right now. We are into the big area of support, 141 down to 125. We know that the weekly bulls have forfeited all the momentum at this point, giving back the entire weekly move. So it's going to take a big catalyst to get AMD back in motion. We need good NVIDIA earnings. If NVIDIA does not have good earnings, guys, I do expect this daily downtrend to continue on AMD. And at that point, I might take some short puts after NVIDIA earnings down here in the lower 120s. But to be honest with you guys, at this point in time, I would rather play short puts on NVIDIA or on TSMC themselves, right? Because although AMD is having a EPS ramp right now, a revenue ramp as well right now, they're just not being favored by the market, and they're only clawing away about 5, 10% of NVIDIA's market share. NVIDIA still has a dominant 85 to 90% of total market share in data centers right now. So instead of playing the number 2 player, I'm just going to focus all my bets to the number 1 player for now, but I do still have a penchant to play AMD, but I need a really good price. And for me, that really good price is under 130. So that's just how I see it in terms of that. Moving into Amazon right now. So Amazon with a nice little day of recovery today. They had the context of the daily uptrend. We lost it with the daily higher lows, right? Being flushed. And now we know, what are we trying to do right now? We're trying to find a base of support around that 200 psychological. And what are the bulls looking to do? Well, the bulls were just looking for a weekly higher low for further trend continuation. I will remind you, you do not need a daily downtrend for weekly consolidation. All you need to do is flush the daily higher lows and lose the daily uptrend. Losing a daily uptrend and establishing a daily downtrend are two different things. They do not go hand in hand. If the bulls do something like this and recover, this is just a loss of a daily uptrend and then eventual recovery of that. A daily downtrend is lower high into lower lows. And either of these two scenarios, right? If we do set up the higher highs and higher lows, just understand the bears are going for the same thing. They're trying to go for the flush, but what are the bulls looking to do? Just looking for the weekly higher low for further trend continuation, which is why I say if Amazon continues coming down here in the 190s, down to the lower portion of the 190s, it is a good buying opportunity for me. I love this company. I think they'll be extremely efficient in 2025. And look at most of the analyst price targets above there at 235 being the average price, guys. Over 65, almost 70 analysts, and all of these guys have this one rated at a buy or a strong buy above current levels. So I am looking to play the further upside continuation of Amazon through 2025. And yes, I already have leaps, but if we come down here for XYZ reason, I will be buying more. Moving into Google right now. So Google up about 1.57% today, looking quite good, right? We know that the context was we never really lost the daily uptrend. This is just a very, very wide range of accumulation at this point, right? So very healthy day, 1.6% to the upside. Now, to the downside, guys, what do we have below us, right? Excuse me. Now, we have this support range, 176 down to about 170. Not too bad. The bulls have been using this for the past 3 weeks of time, right? What are we looking to do? Well, the context was weekly downtrend. Now the bulls have the weekly uptrend back, looking for the weekly higher lows for possible further trend continuation. Look at the MACD curl. After 4 months of sideways and bearish momentum, we now have more buyers than we do sellers. Bullish momentum is finally back to the stock. And look at the median price target, guys, for Google. $209 is the average price. Look at this EPS expansion. Look at the revenue expansion as a whole too. I know there's a Department of Justice headline that said they are seeking to break up Google. They are seeking to have Google forcibly sell their Chrome browser for $20 billion. But keep in mind, that is just a motion by the Department of Justice for recourse. The judge needs to approve that, and he has until the month of April and May of 2025 to give that approval, or to deny and ask for other recourse from the DOJ that won the case against them. On the opposite side, if the judge does rule that Google needs to sell, Google can always appeal and tie this one up in the courts for another 6 to 12 months, guys. So this is still a very, very far away catalyst. I am not worried at all for Google, but of course it kind of sours the sentiment around the brand right now. But I'm still very, very bullish, looking quite good for some continuation to the upside. Upside target for me remains, first glance, 190. Moving on to Meta right now. So Meta up about 1.21%, but we know that the bulls have been kind of trapped down here, right? Daily downtrend is clear as day right now. The weekly downtrend is also in favor of the bears, which means that we are in monthly consolidation. We know that Meta does this sometimes. Nice rally up, consolidation, nice rally up, consolidation for 1 to 2 months, nice rally up, consolidation for 1 to 2 months. So one thing's for sure, guys, the direction is clear. The bulls control the higher time frame. So are we buyers or sellers? We are definitely going to be buyers, especially at juicy valuations such as these. And Meta is so strong, guys. Their net margins are crazy. If we get further downside consolidation into the 540 down to about 530 range, that would be one of my favorite trades, guys, on the monthly. Breakout, retest of a monthly chart, and then run. That's usually a very high probability trade, especially if the company is improving its fundamentals. It's one thing if they're curling over here and their fundamentals are declining, then most likely you're picking the top. But when the long-term fundamentals look like this on EPS and this in terms of revenue, most likely you're going to get for some further consolidation, especially when we're not that overbought at all and the valuation is fairly decent. So that's the swing trade area I'm looking for on Meta. If they come and pick us up, perfect, so be it. But even as of right now, guys, not the worst swing trade opportunity in my mind, playing some good defense here around the 12 EMA. So taking a look at Microsoft right now. So Microsoft up about 0.49% today, recovering nicely and once again bouncing from the 200-day EMA, which begs the question, is it a good time to be buying Microsoft around the 200-day moving average when the stock has been consolidating for a year and coupling that with ever-improving fundamentals? It's one thing if a stock is consolidating and the fundamentals are getting worse, but would you guys say this EPS is getting worse or better? Would you guys say this revenue is getting worse or better? And all the analyst price targets are clearly above the stock with an average of 500. So it begs the question, is it a good buying opportunity when the stock's been consolidating with improving fundamentals and tagging some historical averages? Well, let's go back in history. That's the fun part about these charts. The 200-day, is it a good proposition to be buying when Microsoft touches the 200 daily moving average? Well, let's go back in history and derive whether or not it's been a good buying opportunity. We can go back in the context of bull markets. Last October of 2023, good buying opportunity. This is the bear market of 2022, so everything was going down. Can't really use that. But if you go back in the context of other bull markets, even COVID was a good buying opportunity down here. We would have to go back to the interest rate temper tantrum of 2018 to find the other opportunity at the 200-day moving average. And before that, we'd have to go back to 2016. But on a long-term basis, is it a good value proposition to be buying Microsoft at the 200? Well, maybe you're not convinced. So let's zoom out to one more time frame and go to the weekly and go to the weekly 50 EMA. Is it a good proposition to be buying Microsoft every time it comes down into the 50 in the context of a bull market? Well, let's go have a look. The last time was COVID. That was a decent buy. The last time was the interest rate temper tantrum of 2018. Usually in the context of a bull market, Microsoft does not present these buying opportunities. Very, very, very rarely does it present these juicy buying opportunities. And now we are in a bull market and there's no major things at play. Company is improving its fundamentals and we have another buying opportunity. So this is why I say that Microsoft has been one of my favorite stocks to be building a position in lately. Long-term, leap calls and call debit spreads as well. I will continue to do so if we drop further down towards 410. I'll be writing some short puts, 410 down to 400 with 2, 3, 4 weeks worth of time, because eventually I'm sure we're going to get the pop on Microsoft here over the next 1, 2, 3 months. Just have to be a little bit patient and sit on our hands for now, but the stock is not looking too bad at all. Moving into Netflix right now. Netflix, what a powerhouse, guys. 2.87% to the upside, looking very good after the Mike Tyson versus Jake Paul fight that happened this weekend. Take a look at some of the numbers right here, guys. Record reveal that Tyson-Paul fight had 108 million viewers. This is the most streamed global sporting event ever, which goes to show that Netflix does have the possibility to enter this brand new market of live streamed sports events. Looking very solid for Netflix, adding another tool to their tool belt, and once again, showing why they are the best streaming company in the industry and why probably nobody is going to catch them ever. Daily uptrend is very nice right now, so when we do get the topping out of this move, going to be looking for a daily higher low. Anything at this point above 810, be looking for that daily higher low for further trend continuation. Now, this is not where I'm looking to buy Netflix. I have long-term shares, which I'm holding, not looking to add more up here, but I'm also not selling a single share. If we do get some form of extended pullback eventually, because they do happen on occasion, right? I'll be looking for a pullback on the weekly, and if we can maybe touch the weekly 12 EMA as it curls back up, that could be a decent little swing trade opportunity, but very tough for me to swing trade it up here. Moving into NVIDIA right now. So NVIDIA moving up nicely today before earnings, 5%. But we know from earlier in the video that NVIDIA is going to move about 7.5% up or down. So 7.5% to the upside would put us well above the all-time highs into the 150 range, 155. But 7.5 to the downside, guys, or more, would send us into the furtherance of the daily downtrend, the furtherance of the weekly consolidation cycle as well. But we also know the bulls have a lot of support down here, 130 to 125. If you ask me for my best guess what's going to happen for these earnings, I do believe that NVIDIA is going to absolutely smash their numbers. However, the expectations for this company is very high. I do not believe they'll be able to raise guidance enough to get those 15-20% earnings beats that we've been used to in prior quarters, such as the ones we had, especially in 2023 and early 2024. But I think they'll be very good. But to where they can beat the expected move, that is what I'm not sure of at this point in time, guys. I'm pretty sure their earnings are going to be good, but how the market reacts to them is obviously a heck of a toss-up. Now, how am I going to be playing this, guys? Quite simply, I'm going to be writing puts under the market. So here I have the options chain for NVIDIA. We know the expected move is 7.5%. I'm going to be going slightly outside of that. So I'm going to be probably going with a 10-11% to the downside. Usually I like to run the 2 times the expected move, which would put us about 15. So about the 124 area. And you'll see that there's some decent premium available at those levels. Here's the 124s. And you can see to write puts, right? So it's a bullish strategy. To write puts at the 124s, we're getting about 50 cents, which is very, very decent for that margin of safety, right? But I'm going to be going probably a little bit more aggressive at the 130s, maybe all the way up to the 133s, at pocketing as close as possible to $1 as I can find. So that's the strategy that I'm going to be employing because I want NVIDIA here because I really do believe that any short-term dips like this are buying opportunities, and I will be looking to ride this stock higher into 2025. So that is my earnings best guess analysis and how I will be playing the stock myself tomorrow. Moving on to Tesla right now. Tesla, 2.14% to the upside, looking very strong is Tesla. Daily uptrend, fully in motion right now. Look like they do want to challenge the 350 again. And beyond that, where's the next level of resistance, guys? I'm glad you asked. It is 400 to 410, guys. So we're almost there. Seems like just a few short weeks ago, people were worried about Tesla going down to $50. And now people are talking about the all-time highs. It's very funny how sentiment can shift in such a short amount of time. Daily bulls are in full control, but in the event we cannot get it done and consolidate a little bit more with some downswings here, I'll be looking to play some short puts. 300 to 290 benefiting from the volatility. Would not mind being assigned some shares of Tesla right there, guys. Just looking to play the volatility more than anything. And if we're holding, I see no red flags in the stock right now. Beautiful weekly motion on the stock and any weekly pullback looking for a higher low. Anything above 242 looking for the weekly higher low for further trend continuation. Take a look at the fallback area, 310 to 300. That is the most relevant area of prior resistance, which should now be current support. At the moving averages, depending how fast we fall here, the moving averages should be catching up with that range as well. Moving on to Palantir. Palantir up about 2.81% today. Not too bad at all. Palantir is just kind of maintaining its range. Tried to go for the daily breakout and failed. If we do breach below this level right here, 58.50, let's call it, well, we will kind of lose the daily uptrend, right? And it opens the door for the bears to take over, set up the daily downtrend, and that would just be healthy consolidation, guys. At that point in time, you would just be looking for a weekly higher low for further trend continuation. Anything at this point above 40.75 is just looking for that weekly higher low, looking extremely strong, but looking still a little bit overbought and looking a little bit expensive as well is Palantir right now. I love the company. I'm a shareholder myself, but sometimes you got to call a spade, right? It is what it is. The company's expensive right now. I'm not buying any shares up here, but if we do get a pullback, I would not mind playing some short puts a little bit aggressively in the lower to mid $50 range. So that is how I look at Palantir as a whole. Now, in terms of the swing trades, guys, not that much, right? So what we did today is I closed a few trades and I'm going to reset. So number one that we closed is the Google short puts. We closed these. We had the 172.5s. For this Friday, I closed them 85 cents to 40 cents. So we captured over 50% of the premium. I'm just freeing up some capital for the potential Russian headlines into tomorrow's session, or maybe poorly received NVIDIA earnings, and I'll be going heavy, right? If we get a market sell-off after the NVIDIA earnings, I have tons of buying power back, and I can use that buying power in my favorite companies, maybe even bid Google again. The other trades that I took is I closed the NVIDIA pre-earnings trade that I took yesterday. We literally fired these off yesterday, guys. The 115s for 65 cents, short puts. We closed them today for 30 cents, over 50% realized in one single day. And now I'm going to rotate these a little bit higher and a little bit riskier with, 35 cents of premium here, 35 bucks in my pocket, which I'm going to use for the next trade as well. So that's the ones that we closed today. In terms of the ones that we opened, only a few key earnings trades right here. Target the 131s, 2 times expected move for standard deviation for earnings, the strategy that I tell you guys to do. Well, no, I don't tell you guys to do. I tell you guys that I'm doing on the Sunday videos, top 5 options plays. So this is a 2 times expected move for target. Very, very simple. 2 times the expected move, about 15% away, and right into this crucial level, the bottom end of the 130 support level, which is a very massive level down here at about the 131, right? So fairly safe play, but we'll see what happens. And TJX, I love this company. I got the 108 puts, also a 2 times the expected move. And the 108s, as you can see, is pretty much in this weekly support range, right about down here. The 110 down to about the 108, culminating in the 200 daily moving average at that 108 mark. So that's the level that I chose for TJX. I think they'll have pretty decent earnings. I mean, the chart speaks for itself. Very resilient company, very resilient business model. And, the fashion trends change, as I said, but the business model keeps you alive. Very defensive company. They perform great in any economy right now. And we know that thrifting has been a very hot topic, especially for the younger generations right now. It's been very, very, very trendy in the past year. So I'm not too nervous about this company's earnings, which is why I went with this short put as well. And you can see the premiums received are not the best. But then again, we're in these trades for one single day. If these stocks either come down a little bit, go flat, or go up, we can close these at 100% wins essentially. Those are the only ones that I have put on for tomorrow. As I said, saving most of my buying power, going to play NVIDIA earnings a little bit heavy before, and especially after 2, I'll be looking for any other discounts possibly in the market. And if Russia hits us with some more headlines, I'll be doing those too. So that's pretty much all the positions that we updated for today. The next portfolio update, guys, will come on the Friday session as per usual. I usually only show you guys the trades on the YouTube Monday, Tuesday, and then the Friday for the full recap. And then Wednesday and Thursday, the videos are a little bit shorter, or we take that extra time to do a little bit more earnings, right? NVIDIA, Snowflake, Palo Alto, Target tomorrow, a lot of them to cover, right? So that being said, guys, that's all I had for you guys in today's video. Hopefully you appreciated it. If you enjoyed today's video, consider dropping a like. Would appreciate it for the growth of the channel. Also consider subscribing to the channel if you're new. We do these every Monday to Friday after the close. And if you have any questions, as per usual, guys, always feel free to leave them down below in the comments. If you want my opinion on a stock, on an options play, anything you want, I will do my best to give you my opinion without it being financial advice, of course. And in the event you are interested to be joining the Discord to get access to all of these trades, these are all the trades that I've made since the inception of the Discord. The wins are the check marks, the losses are the small red ones, but you can see the losses are usually very tiny. You can see I'll just go through them all. This is 2 months plus of weekly recap trades, right? The targets are assignments, and we've pretty much gotten out of almost all of them at very profitable amounts. And we're even running some assignments this week as well that we got assigned last week, and I showed you guys those on the portfolio positions, and we're doing very well on those so far too. So if you want access to all those trades, and no, it's not only the wheel strategy and selling puts, we also do a ton of call options, leap call options, share plays, call debit spreads, tons of different things. You want access to all the different trade styles, the private morning live streams, which we do Monday through Friday, every single morning before the open. Do I have them right here? Yeah, they're all right here, guys. So you can see I do these for about an hour, almost 2 hours sometimes, full questions. Anything is game. You guys want me to look at your stocks. And in the event you missed the live streams, you can watch them again and you can ask me your questions all throughout the day in terms of trade opportunities, day trading opportunities, anything you want all throughout the day, guys. So if you want to have access to the Discord, the link is always down below in the description. So hopefully I see you in there. And if not, well, I guess I'll see you back on the channel, guys. Take care. That's it for me. See you tomorrow after the close. Have fun. Take care and peace.